Okay, so with all of that, financial advisor Paul Lane from Armstrong Advisory Group is with us now. Hi, Paul. Thanks for coming in. It's great to see you.
Thanks
The
for having me.
market clearly responding here to the tariff announcement as of yesterday. Seems like a lot of uncertainty. We know the markets do not like uncertainty. So, what are some of the measures that might nail down less uncertainty, at least in the short term?
Yeah, certainly it's something that's going to be challenging to navigate for a lot of investors out there. We saw the market on the S&P sell off close to 5% today, but it's really important for people who have their portfolio out there to think about the long term. There's always going to be noise on a day-to-day basis, but this too shall pass, and we really need to see further developments before anyone would make any wholesale changes with their investment portfolio.
And everyone who's invested in this market, of course, is watching what it's doing, watching these numbers right now. And especially for those who are of retirement age, we talk about what can happen long term, what can happen short term. But if you're retiring soon, this can be alarming. So what should that group do?
Really revisit their financial resources and put a financial plan together in place. There's always going to be market volatility up or down, but you need to understand, what do I need to live on in retirement, and do I have the adequate resources to meet those needs? And part of that is assessing your asset allocation. So you can have stocks and bonds. They each have different risk components to them. You want to make sure you have the proper balance, particularly in times like these.
Paul, so much of the world market is dependent upon the moves made here in the U.S. So as we started our conversation, I was asking you a couple of the indicators that you might start to see to let us know as investors that things are starting to calm down a little bit. So if you could project out a little bit, and what might we start to see? President Trump and the administration indicating that this is a long-term investment here in a project to basically shore up the economy for future generations. But what do we do in the short term to look for? What are we looking for that are clear signs that something might be leveling out a little bit?
What President Trump and their administration is aiming to do is to try and bring back more manufacturing jobs to the United States. Unfortunately, there's not really a short-term indicator for that. That's going to take years in order for these complex supply chains to be reworked, whether that's auto manufacturing or something like assembling an iPhone for Apple. These involve numerous countries. So this idea that it could be done all domestically, that's going to take some time. In terms of calming down the United States markets, hopefully there are some trade agreements that are made. There's no indications that negotiations are open yet. But if some of these countries can come to the negotiating table and that can be resolved, I think that would be a bit of a sigh of relief for Wall Street if there are some trade deals made to lessen some of the blows on some of these tariffs that are in place that are pretty exorbitant for some of the countries, particularly in Asia, that we deal with a lot on the import front.
Paul, before I let you go, I was going to ask you about that. The world markets don't like uncertainty either, too, right? So would you suspect that they might have some input on how to calm things down?
Oh, absolutely. And the concern here is that there could be retaliatory efforts by a lot of different countries out there, whether that's the EU or China or Taiwan or others. So that is all what is leading to this sell-off. Is there's uncertainty across the board. You don't know if some of these other countries are going to take actions to try and harm the US economy. So in terms of shoring that up or hoping for more progress, the negotiating table and those trade agreements would be really critical. And any commentary out there from other nations that they're willing to work with us to address some of the trade deficit, that would be really helpful for the US markets and for the global markets to see. But I don't think that comes right away. That's going to take a little bit of time, hopefully sooner rather than later, though.
Hopefully sooner rather than later. Paul Lane from Armstrong Financial Group, appreciate your insight. Thanks so much for joining us today.
Thanks, guys.